I'm Ulari and welcome to First Super's mid-year investment update. I am joined by First Super's CEO Bill Watson, who will be looking back on how the fund performed for members in 2022. Bill, First Super's balance option was the second best performing MySuper option for 2022. We returned a positive result when most other funds didn't. Can you tell us more about this?
Our balanced option, according to Super Ratings, was the second best performing option in 2022. We returned 0.1%. Now that might not seem a lot, but in the context of 2022, it was a year where if you didn't lose money, you did a great job. By contrast, other funds lost 2%, 4% and 5% and even more. So if you had a $200,000 balance and you lost 5%, that's a $10,000 hit to your account. By contrast, we put money in our member account. But it's not just about 2022. First Super is in the top 20 for 10-year returns, according to Super Ratings. So we're not just a flash in the pan one-year performer, we've got a solid record of good returns over many years.
It was a difficult year in the financial markets last year. Can you tell us about some of the challenges and how First Super's fund managers acted to protect members' retirement savings?
Coming into the year, we had Russia's invasion of Ukraine, and what that meant was there was a substantial increase in energy prices, which drove inflation, a substantial increase in food prices, which drove inflation, and in parallel to that, we saw reserve banks tightening monetary policy as inflation took off. So that sapped a lot of confidence out of the markets and caused a lot of managers to pause to think about what's next. So for us, we went in being underweight to growth assets. So it meant, as I've said, in a year where not losing money was the key objective, we were well positioned. We're also fortunate that a number of our asset classes performed really well. Infrastructure throughout the year, private equity in the first half of the year, and then international and Australian shares in the second half of the year. They all outperformed their benchmarks, and that all contributed to the positive result that we had.
Let's talk about diversification. What does it mean and why is it important for your super?
Diversification's all about spreading the risk across a number of asset classes. For example, shares and cash. So what that means is that if one doesn't perform and the other one performs, it sort of evens itself out. So for our balanced option, we've got a spread of assets across the board, whether it's infrastructure, property, shares, credit and cash, and that gives us the diversification that we need. What we do know is that historically diversification has worked. It provides protection and helps even things up. And that's why we will continue our investment philosophy to have diversification. We'll have an allocation to growth assets and also defensive assets so we can provide our members with protection. For those members who don't want as much diversification, we've got a couple of investment options that provide that. First of all, cash, and it is what it says, 100% cash in the bank. And our Shares Plus, which is exposure to shares both listed and unlisted. The other two options have got a mix and they provide substantially more diversification.
Bill, what's on the horizon for investors in 2023? How are we expecting super to perform?
Well, we've had a really good start to 2023. Share markets in January have really performed. Now, if they maintain that for the next 5 months, then what we'll see is some pretty solid returns at the end of this financial year. I'm not predicting what's going to happen, and certainly with the volatility that we've seen in markets in the last number of years with ups and downs, we're a long way away from pulling the cake out of the oven and saying this is what it looks like. So that's the first thing. What's overhanging the markets at the moment is the fear of inflation and just what view people have about whether inflation beast has been tamed or not. So what we're seeing is central banks increasing interest rates to continue to tame the inflation beast. But what that means for people is that there's more money going out the door in mortgage payments, groceries are a lot more expensive, and for companies, the cost of doing business is also more expensive. All of that says is the central banks are achieving their aim of slowing the economy, but there's going to be a lot of pain for people on the way through. That's the unfortunate desired effect of taming the inflation beast. What that means for company earnings, we just don't quite know at the moment, but it means people will spend less, businesses will be less profitable, and potentially we see some unpleasant surprises in the market. The other thing as well is in the United States, we just don't know whether they've got on top of inflation just yet. It seems to be persistently high. And then of course, we've got the wild cards of Russia and Ukraine. That could end up in a number of scenarios. It could continue to have an impact. And then Europe unfolding as well. And finally, we've got China gearing back up. So we just don't quite know what it looks like. It could scare markets if inflation doesn't fall, or we get the soft landing. So it's a bit too early to say. But the thing that I really want to emphasise is that if you've got a question about the fund, the investments, or just how you feel about your super, you can talk to our member services team. And the thing that I'd really like to emphasise is we're here to help if you've got questions. Whether it's about your super generally, investment markets, or the options. You can talk to our member services team, or you can ask to speak to one of our financial planners. And there's no extra charge to you to discuss your investments with an expert. So I'd really emphasise, pick up the phone and we'd love to help you out with your questions.
Thanks, Bill. Thanks for watching. Join us next time for another investment update.